Hey folks, Dan Frio here of The Opening Bell with Dan Frio. I, of course, am Dan Frio. Today we're going to talk about what the Fed said yesterday that had a little bump up in the markets, ease fears of inflation a little bit. Stock market went up, mortgage rates tapered back. Did it carry through to today? Find out next. Don't go away. We'll be right back. So good morning to you. Today is March 18th, 2021. I want to talk about what the Fed said yesterday, what the differential is from what they said last month and this month, and then unpack it all. So let's dig into it right now, and then we'll follow the trends on is the stock market continuing to rally as it did yesterday? Are mortgage rates starting to come down as they did yesterday right after the speech? Let's find out. Let's dig into it. Okay, so where we want to go from here. We'll start with the employment or unemployment report. Unemployment came in, 770,000 more Americans filed for new unemployment claims. That was up more than expected, but less than 800,000. I like how they throw this in here, but remains below 800,000. Well, 770,000 is still a ton. I think the expectation was like 400. So it's almost double what the expectation was. So that is basically where everything is hinging right now. You're going to see, the employment numbers and then the Treasury yield. Okay, the Federal Reserve, let me talk about what the Federal Reserve controls. The Federal Reserve controls the federal funds rate. That's what they control. And then what they do is they go out in the open market and buy treasuries and other bonds and other mortgage-backed securities to help stable the situation. So what they do is, just like any other product, supply demand. We have ample amount of supply, or let's say a finite amount of supply. The Fed comes in and buys. As they're buying it up, that increases the price and drops the yield. That's the intention behind all of this. But it's kind of not working right now because institutional investors are coming in and selling off treasuries, driving up the yields because they want that yield to go up and then replace with their sale with a higher yield. Okay, so you get that. They're selling a lower yield bond as the prices go down and down and down because they're selling pressure. Rates go up and then they'll replenish their positions with higher rates. Okay, so that's kind of what's going on in this, and it's spooking the market because the higher the Treasury yield goes, it's pulling money away from investments. So if you check out what's going on in the markets right now, the S&P is down 24, no big deal. The Dow is down 70, kind of no big, or up 70, no real big deal. But here's where we're going back to the NASDAQ. The NASDAQ are the high valuation stocks, a lot of the tech stocks that people were pouring money into to get appreciation and so forth. But they're saying, well, maybe it's not worth as much risk now when we can put monies in other places with higher yields. So that's basically just a backdrop of what's going on with things right now. So we know the $1.9 billion deal went through. Funds are starting to deplete or pushed out to the economy. That money is going to pump into the system, but that money's got to go somewhere. Where is it going to go? But let's follow the tape of the money right now. 10-year Treasury yield surged to 14-month high of 1.74. That's high. That's really high. So the most likely you're going to see, again, a depletion in the NASDAQ for sure. And then I'm also saying, should the Dow be affected? Well, the problem with all that, or I won't say a problem, is there's so much money being pumped into the system. That money's got to go somewhere. And people aren't going to stick it under their mattress. They're not going to put it in their savings account because there's a zero yield there. They got to put it somewhere to invest, to outrun inflation, because inflation it deteriorates the value of a dollar. So you have to at least get 2%, say, each year in return on your money to make that dollar worth the same as it is today. So let's explain that one. If you have a dollar today, inflation is 2%. I'm just going to use that factor. 2% a year. That means your dollar value or purchasing power decreased by 2% a year. So you need a return on your dollar. You need to invest your dollar and get at least a 2% return for that dollar to be able to have the same purchasing power the next year. So that's where all this is coming into play. So in the inflation sphere. So we go into it and let's look at these numbers. So this is a bad number. But again, my thinking behind all this, there are job opportunities out there, but a lot of people are saying, you know, that job opportunity is paying less than I get it by staying at home. So I'm going to stay at home. I'm sorry, guys, that's the facts on a lot of these things because there's other reports that come out. The JOLT index says there's almost 7 million job openings. Okay, so if there's 7 million job openings, why aren't they being filled? Well, they're probably low-waged income jobs. And the people in the middle to low income range are saying, you know, I can stay at home, make as much money at home in cash. And so why would I not do that? So that's the backdrop behind that. 10-year treasuries, as we saw there, Fed expects core inflation to hit 2.2% this year, but don't expect that to run long term. The U.S. Central banks indicate that they plan to hike interest rates. They will not plan to hike interest rates until 2023, and they'll continue to buy $120 billion in bond purchases each month. Where that comes into play, again, is as they step in and buy, they're hoping to drive the prices down. Well, no, they're trying to stabilize the prices. Sorry about that. Getting a little confused there. But the nice thing is, on the mortgage side of things, and this is what I do for a living, is they're going in and they're going to continue to buy at least $40 billion in mortgage-backed securities each month to try to halt a rise in mortgage rates. Okay, so that's basically what that data is telling us. Federal Reserve. I'm going to post this down below in the description. This gives you all kind of stuff what's going on with the Federal Reserve. It's a specific caption in CNBC, and you can go through there. It's really informative. So if you really want to know what the Fed does, how they do it, why they do it, and how they control sectors of the economy, this is the place to go because it'll answer a lot of those questions for you. The Fed. What happens every time the Fed comes out and talks or speaks, it gets analyzed against what they said the last month. And basically this month, there wasn't really much corrections here, and there wasn't, it was more of a question session, Q&A session. So if you break down what Federal Chairman Powell said, he basically didn't change his positions anywhere. To a point. The only thing in here says weaker demand and earlier declines in oil prices have been holding down consumer price inflation. Well, as we know, oil prices are skyrocketing. Go past your gas station, I'm sure the gas is at least $3 a gallon right now. So that terminology changed, saying affected by the pandemic remain weak. Basically, sectors remain weak. Inflation continues to run below 2%. So he basically just said inflation is being in check by oil, but now he's saying, well, oil's up, but inflation is still in check. Okay, so that's what's going on basically with the stock market and why things are going on there. Let's check the economic calendar. I want to just skim through to this real quick. Thursday's economic calendar. Initial jobless claims, they were expected to come in at 700,000. It was 770. I even saw a report they were hoping it would come in at 400. That didn't happen. Now we go to continued jobless claims. That went up. It went up quite a bit. So we have people filing new. Continued jobless claims continued to rise. Philly Fed survey. So those are the things we're going to focus on because that's what the Fed is concerned about. They're trying to get more and more and more people back to work. Okay, so that's the focus there. All right, so now we discussed what the Fed's doing. The coronavirus 19 stimulus package bill went through. Now they're working on an infrastructure bill of another trillion or more for that. And that's going to trickle through and help stocks. So let's break down stocks right now. So here's the portfolio that we monitor. And I'm going to tell you my thinking behind all of this. Because of what the Fed did, yesterday we saw a little bump up in the NASDAQ. Those are tech stocks. But if you follow my channel, I've been saying that I'm showing you what I do in my personal portfolios. This is basically entertainment and educational purposes for you guys, to make you think, to open some doors for you and say, oh, I never thought of it that way, and so forth. So the channel, I'm not a stockbroker, I'm not a wealth advisor, don't pay me to trade. Do your own research behind all this. I'm a mortgage person, so if you need help with a mortgage, if you're looking to refinance, buy, build, or whatever, you're in forbearance, I have special videos on that. Please reach out to me and my team. We'd love to help you in those areas. But we're focusing on the morning sessions in regards to stocks. So I've been adding to my positions in a few areas, and we're going to go through those here in a second. But my staples, and it's an acronym called FANG that Wall Street has, and part of that FANG is Google, Apple, and Facebook. The other one is Netflix. I don't own any positions in Netflix, and I don't monitor Netflix. I love their system. I'm just not a proponent of buying into that stock. Don't ask why, I just don't. But Google, we can see that's down 1%. Apple's down 2%, and Facebook is down 1%. That is part of FANG. That is part of the repercussions of bond yields going up. People are getting out of the NASDAQ and tech stocks because the yield on the Treasury. And I have ample videos on that, so check those out. So my positions that I was adding to is Gush, and this is oil and gas. It's down 5% today. Not quite sure, and I'm going to show you why. Ford, this is on my electric vehicle play. It's up 1.5% today. Been going down through the other pieces, XLF. That is the financial sector ETF. That is, Citibank, and a whole bunch of other financial sectors. So check out that. The ticker symbol is XLF. It is up 1.68%. And Disney, for my recreational play, is down 1%. Okay. The other piece of the puzzle that I focus on for especially millennials, younger people, and even my kids is you hire a professional wealth advisor. Well, it's hard to do that when you don't have much money in the market. So how do you do that? Get a highly qualified professional investor cheaply. Well, you buy Berkshire Hathaway stock. This is managed very, very well by Warren Buffett, who is one of the world's, in history's, one of the best investors we've ever seen. And this is a way to play that play. It is up 1% today, and this is where I'm advising the millennials and my own children to look at this stock right here. So you can stop through here. You can see because of this, also cryptocurrencies. We're going to get there in a second. So I'm not quite sure in this section right here, and we're going to go to the cryptocurrencies here in a second. But I hold positions in Bitcoin Cash, Bitcoin, and Ethereum. Those are the cryptocurrencies that I own. Those are each down 1% or 3% today. So 3%, 1.5%, same thing. And Bitcoin Cash is up 0.49. But I'm going to show you something here why this doesn't really make a lot of sense. But also in this format, we focus on a couple different things. We focus on blockchain and mining of cryptocurrencies. Right now, I hold positions in Hive. This has taken a huge dump on me. And this might be another good entry point to get back in. I'll probably bring dollar cost average my position on this and buy again today on this because it's almost down 4%. So I'll kind of, this is a phenomenal company. They'll do very, very, very well as cryptocurrencies grow, especially Bitcoin. The other area is Riot. Riot is down 4% today. Again, I'm going to show you here in a second, cryptocurrencies, I'm almost positive they're up for today. So I'm not really quite sure why these are dumping, other than people are just dumping stuff or they're getting booted out of their stop losses. So let's go down through here and see if there's any other huge movers in the market. Curaleaf Holdings, that's a cannabis stock. I hold positions in that as well. It's up almost 3% today. Let's go down to the cannabis area, and that's down here in the latter part. It's all over the board. So we have Afria, stable, Tilray, I'll say stable. So they're basically at 0. I'll take 0 right now for what's going on in the market. So you can stop here, pause the video, check out any of these here that I monitor. The reason why I monitor these are a lot of sectors of the market that I try to watch, and I look at these on a daily basis to see, am I missing something? And like if you have that stock that just pops out, like right here, it's down. The Grayscale Ethereum Trust is down 4%. Why? Well, it's Ethereum. It's hugely volatile. But if you come down to some of these staple stocks and it's down more than the averages, you got to look into it and say why. And it's conversely on the other side. If it's up more than normal, you say why, and you research it. I still don't understand why the semiconductor stocks aren't killing it. I added to my positions for several months on that, and I'm basically, at break even at best. I might be down a little bit, but because of the semiconductor shortage, my thought there is, they have pricing power. So that's enough for stocks right now. We'll focus on those on a daily basis, but these change all the time. But again, my positions that I was loading up on or adding to my positions, they're not doing too bad today. Ford, XLF, and Disney. So if you have those, overall, you're up today, and Berkshire Hathaway. Okay, so that's that part. Cryptocurrencies, what are those doing? They should be doing pretty well today based on the stimulus package and everything else. Bitcoin up 5% today, up 1% over the past week. Ethereum's up 1.4% today. Cardano's on a run. And I'm researching this more and more and more. We haven't missed the boat, but I think I'm going to start adding or putting this as one of my positions. And I'll come up with a video on this to explain why. The other areas that I hold, positions I hold, are Litecoin. Where did that go? I think I just blew past that. Litecoin is up 2.42% today, and Bitcoin Cash is up 2.37% today. So do you see, understand what I'm saying here? If Bitcoin's up 5% today and Ethereum's up 1.5% today, when we go back to these areas here, I buy stocks in these companies. So this is the price of a Bitcoin, 57,928. You can buy that as a Bitcoin. Like if you wanted to buy gold, you can buy a bar of gold. Or you could buy a stock that holds gold as the primary investment. So that's how you go through here. This is where I add to my positions there. Grayscale Bitcoin Cash, Grayscale Bitcoin, Grayscale Ethereum. Okay, so if over here we're up 5%, 1%, 2%, so we're up 2 or 3% on average on all these, how are these down 1.5%, 4%, and so forth? So there's probably profit taking, people dropping down their positions and so forth, but it normally reflects the price of Bitcoin almost in tandem. Okay, so that's that part of it. Based on all this stuff going on, what's going on with the dollar, it's strengthening. Again, this is, I don't get it. It's an anomaly. But, with the Fed coming out saying that they're going to control, a lot of this stuff, I still don't understand this. I would be shorting the dollar because I think it should be at least below $90 a share. We focus on this, or we monitor this basically for our cryptocurrency purposes. Okay. Also, the price of a dollar, as the dollar strengthens, it means I won't go there. When you're talking about products being imported and exported out of the country, in and out of the country, as the dollar strengthens, it makes our products more expensive to those over in other countries. Thus, we can ship in cheaper products from around the world to compete with our own products. So let's cancel through that for right now. The economic calendar we went through today. So let's see what's going on with mortgage-backed securities. We are getting clobbered, just completely clobbered. We are down 58. That is a major move. We locked a lot of people, or anybody that we had floating basically yesterday, we locked because we had a nice rally yesterday. So let's go over what's going on there. Yesterday we were here and we see the 103 right there. We hit that number when we went over it right here. There's a little line right there. Let me see if I can erase this one. Bear with me a second. See where that line goes right there? When we peaked over that, I'm like, I don't think that's a run that we're going to run up to the next level because it's a line. It's not part of the bar chart. So we locked in anybody that we had continually floating. We basically locked you in there. All right. I didn't expect this much of a drop today. I figured we would stabilize and maybe trade right at this range or between here and here. We didn't. We blew past another Fibonacci level. I think, again, this is an overreaction. I think by the end of the day, we should be back to this red line right here. I posted 4 o'clock what's going on with mortgage-backed securities. So we'll see if my instincts are right there. I think this is a way over correct. And then same with the Treasury. Basically what this Treasury is saying, and I'm going to summarize this now and I'll follow up tomorrow, is Federal Chairman Powell is coming out with statements. The market isn't really believing his statements. So that's why you're seeing a run up in the 10-year Treasury. This was basically 0.8 or 0.9 not many months ago. So it's basically doubled. The yield has doubled in the last 60 to 90 days. That is spooking the market. And the markets, there's a lot of uncertainty going on right now in the markets, and that's why we follow this on a hour. Basically what I do is I follow it on a minute by minute, hour by hour, day by day basis, and that's why I try to summarize it for you each day, each and every day. So that's it. I hope you got some value over this video. I know I was kind of sporadic. There's a lot of pieces of this puzzle to cover, but I do mortgages for a living. We're having a big move in the mortgage markets today, so I'm going into that section of my business now. I'm going to focus on mortgages for the rest of the day. So hope you learned something. God bless. Please don't forget me and give me a thumbs up. Subscribe down below. Hit the bell so every time I post a video, you get an alert. Take care, guys. Have a happy, warm, prosperous day. Take care. Bye-bye.